All right, first off, I'm going to apologize for the volume on this. I'm having some trouble with my microphone on my laptop. Can't seem to figure out the problem, so we'll do the best we can. There was some question until today as to whether or not stocks were going to drop into a half cycle low, maybe a short daily cycle low. But after today, we've marginally broken this intermediate trend line. So I think the scenario that's in play is that the second daily cycle right here is rolling over into an intermediate degree decline. So something similar to what this was right here. This was an intermediate decline. We're getting pretty oversold, and usually these intermediate declines will have a B wave bounce that catches the early buyers off guard, and then we get a C wave down before the final bottom. So you can see that's what this was. This was our B wave bounce that looked like the bottom. We had a reversal candle here, but it's too early, and then the sellers sell into that bounce, and then you get a lower low. You can see this was just kind of a marginally lower low. It didn't really do much more damage, especially on a closing basis below this pivot here. Same thing's probably likely to happen this time. Somewhere in here we'll get more than likely we're going to get a B wave bounce, and then we'll get that second leg down, and usually you'll get a divergence in the McClellan oscillator, and usually a divergence in momentum, and then we'll get our final intermediate bottom, and then we'll head back up into the advancing phase of the next intermediate cycle, which should make higher highs. And I kind of expect that at some point here the Fed's gonna panic, and they're gonna walk back their hawkish tone a little bit. Maybe the odds on a rate hike start to go down drastically, and the Fed is not going to hike rates until until the market prices it in. They're not going to throw a monkey wrench into trillions of dollars worth of bond investments and risk crashing the bond market. So the Fed will only raise rates when the market has fully priced it in, and if the market starts to price out much further out a rate hike, then the Fed's not going to raise rates. And so I think there is a scenario here where we find that intermediate bottom, and then we get a change in rhetoric on the Fed, maybe a little less hawkish, or maybe even dovish, and then we just get a rocket launch out of that bottom. So kind of similar to what happened here. This is rocket launch type move. But I think we have to finish this intermediate cycle low, which means at some point we need to bounce, then we need to get our second leg down. Very often the intermediate decline will break below the previous previous daily cycle low. So there's a possibility that we get a bounce, and then another move down that breaks this pivot right here, and then we get our final bottom. Now on the plus side, this daily cycle is getting really mature, so I think this whole process of bounce, second leg down, is going to unfold pretty quickly within the next 5 to 10 days. So ahead of the Fed meeting, I would say, and it's even possible that we could bottom early next week or mid next week, and then again that rhetoric changes, and we get this rocket launch explosive move off the bottom that has the market back near the all-time highs in time for the FOMC meeting at the end of the month. So just something to watch here. Should be due for a bounce any day now, but I would not trust that bounce. I would look for one more leg down, something that closes below this intermediate trend line here, and then at that point I think we're going to be set up for an explosive move out of that intermediate cycle low.